What is good, Ape Nation? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only AMC stock and go over some bearish and bullish scenarios with AMC, and also talk about what's more probable to actually play out based off the price action and technical analysis. I'm also going to talk about the 10-year treasury yield and how this actually relates to AMC in the future. Now, before I say anything about it, however, before I talk about where I see AMC going, what technical analysis is showing, I do have to mention some very important things first. First off, I'm not a financial planner. This is all for educational purposes only, so please do not take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, benefits the entire Ape community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you do sign up for Moomoo and deposit $100, you're not only going to qualify for up to 5 free stocks, each worth up to $3,500, but you're also going to have the opportunity to win up to $200,000, as Moomoo is giving away 200 grand for the new year. So if you want a chance to win $200,000, guys, and you want up to 5 free stocks, check out the link down below, deposit $100 into Moomoo, and you will have your chance. With that out of the way, let's get on with the video. So this is AMC's share price. As you guys can see, AMC is currently in the $16 range, and as of right now, I am recording this during the open hours, so I know this may not be perfect, but I want you to look at AMC from this perspective. So I drew out this trend line. And I show you guys this in almost all my videos. We're in this falling wedge formation. Now, the thing about that is we're not showing the signs of us like breaking out of it quite yet, because what happened is we dropped quite a bit a few days ago. And then after we dropped, we started to run up, right, today. But then we have a lot of resistance as we go to this $16 range. We did kind of like break out of it a tiny bit, but then we bounced right back down. So right now, it doesn't look like we're breaking out of it quite yet. Now, we do have this inverse head and shoulders that formed, the shoulder and shoulder, which could be an indicator that we could start to break out soon. And in my opinion, guys, it could happen at any given moment. But right now, at the time I'm recording this, it doesn't look like we're breaking out yet. I do want to talk about something else that actually relates to this right here. So anyways, we have these things known as treasury yields. I'm sure you guys have heard of them. They basically represent the interest rate that the US government pays to borrow money for different lengths of time. Now, different yields can have different meanings, but typically when they start to rise at pretty significant rates, stocks tend to fade out a little bit. So this is the 10-year treasury yield, right? And the way AMC has been moving is, look, AMC, you could argue it has negative beta, sure, because there were times AMC ran up really hard even when the market was in the red. So an example would be those outliers in the data, such as January of 2021, June 2. However, the majority of the time AMC runs like a positive beta stock, and many people speculate that that's just hedge funds trying to de-incentivize other investors from investing into it. But from the way I see it, guys, is right now AMC is kind of running with the market, right? The market's obviously kind of green, AMC's in the green, the market's red, AMC's more likely to be in the red. That doesn't mean it's always going to do that. It just means right now that's what it tends to do. So because of that, we could actually help understand AMC's movement based off what the SPY has been doing. So I have the SPY chart right here, and we do have some interesting things to be discussing. Now, I'm not trying to say that correlation means causation or that AMC will always run with the SPY, but I do want to show you guys something interesting. So if we go back to the SPY like this, and we look at the 10-year treasury yield, you'll see something interesting. The yield went up in 2012. What happened to AMC? I'm sorry, the SPY, not AMC. We saw this drop right before. We ran up, then we had another drop in 2012. Okay. Then after that, it ends up dropping pretty significantly and staying down throughout 2012 to 2013. Well, what happened between 2012 and 2013? After that drop, we started to rally, small drop, and we started rallying and rallying and rallying, right? And then look at this right here. From 2014 up until, I would say, let's just say 2015, we pretty much saw the yields drop and drop and drop. What happened between 2014 and 2015 to the SPY? We pretty much rallied the entire time, or at least the large majority of the time. Then what happens is we hit around 2015, we start dropping. Do you guys see this drop right here? 2015 to 2016. Well, what happened here? Around 2015 to 2016, we saw the yield start to go up. Then it went up again before starting to drop a little bit. So once again, very, very similar. That it's not always the case, but it's something that's very interesting. So from 2016 to 2018, the market rallied. What happened from 2016 to 2018? Basically, we had the treasury yield drop and it started to go up actually during that time. Yeah, and this was an indicator that we were getting close to a recession, but that's not what happened. The market rallied. That's because the Fed kept on printing money, doing the things that they kept doing. And as a result of that, it started dropping by 2018 up until like right here towards the end of 2019. And then by 2019, it starts going up, right? Up until 2020. And shortly after, the market starts dropping too. So sometimes, or at least oftentimes, when we see the yield go up, like the way it is right now, that that tends to cause, or at least it tends to be correlated with the phenomenon of the market starting to fade a little bit. That doesn't mean it's going to crash. It just means that we could see a little bit of red. Because if you look at what happened recently, right? Since the start of this year, the SPY, I would say, I would say since the start of this year, the SPY starts taking a big hit. What happened to the treasury yield? I'm sorry, right here. The treasury yield has been rising and rising and rising. If you guys actually look at it, it's been rising. I mean, look at this one right here. This article from CNBC states that the 10-year treasury yield hits 2-year high, hovers around 1.87%. You guys can see this is like a zoomed in version of the chart. It's going up and up and up and up. So this could be an indicator that the SPY has a little bit room to kind of drop a little bit because we have resistance at the $450 range. So it's not looking super, super bullish for the short term. It does look like it could actually drop a little bit. And that in turn could cause AMC to drop a little bit too. Now, I'm not saying AMC is going to just, explode overnight. I'm simply stating that I'm also not trying to say it's going to crash. I'm simply trying to state that we could have a little bit of a dip again. So that's kind of like the bearish scenario, right? What's the bullish scenario? And you can also see this trend line kind of forming, but I don't think that this is a good way of looking at it, right? We're kind of like on this upward trend now. Maybe it's a little bit like this. And then maybe if we end up hitting the end of it, this is kind of like a pennant. We could end up breaking to the upside after that. So that's also very possible, right? But like I said, guys, as of right now, it doesn't look like we're about to break out of this falling wedge quite yet. It looks like we're still respecting the trend line, but I could be wrong. It is possible for us to keep on running. So I really want you guys to just be aware of that because there are still a lot of calls. If you look at the options market, there's still lots of calls that are out of the money. And I do think that a lot of these big institutions would want AMC to stay in the max pain level. So just want to put it out there. Anything can really go down now. It's really hard to predict, but we haven't necessarily shown a sign yet that we're breaking out of this falling wedge yet, which is why I wouldn't be surprised if we went back to like the $15 range or even lower than that one last time. So I just want to prepare you. That's all I have for this one. And right now, let's just look at the uh, Fibonacci extension chart. You guys can see right here, we're still kind of like in the realm of the golden pocket, which is a very good range where a lot of stocks have reversals, but AMC didn't reverse from there. It ended up dipping below that, so it could still dip. I'm just preparing you, but I'm still very bullish for the long term, right? So if we do break out of this wedge, guys, which could actually happen tomorrow, it would be very awesome. But right now, we're not showing the sign of that happening yet. So that's what I have for this one. I want to thank each and every one of you for listening. Have a great rest of the day, and I'll see you in the next one. I still think AMC could run up a little bit soon, but you just have to be a little bit more patient. Thank you, and I'll see you in the next one. AMC to the moon, and peace out.